Are you looking to get approved for the car of your dreams but don't know what to do? The state of the current market is pretty tough. With inflation and the rising cost of cars going way over MSRP, in this video, I'm gonna break down small tweaks that you can do right now to get approved for that next dream car. What's up, winners? My name is Nam. If you're new here, welcome. Here we talk all things personal finance and credit. Start now by subscribing so you don't miss out on any future videos. Now, all the advice that I will be sharing with you today will be pertaining to buying cars at dealerships or private parties that require financing. If you are planning to buy cars cash, that's a totally different video, but in this video, it's mainly for those who are looking to finance their next car. So the first thing that you should know before starting to apply for auto loans or even consider buying a new vehicle is knowing your auto credit scores. You've probably heard of the FICO score, right? It's the golden standard for credit scores in the US. But here's the kicker. There's a special version just for cars called the FICO Auto Score. Think of it like this. The regular FICO score is your general report card, but the FICO Auto Score is a grade for your car loans. While the usual FICO scores play between 300 to 850, the auto FICO scores, they dance between 250 and 900. So the only place that I know of where you can get all of your FICO scores is through myfico.com. This is directly from the FICO company. Now, if you're scratching your head wondering where to find this score, I got you. Yeah, it's gonna cost about $30 a month, but if you're serious about getting that car, it's totally worth it for at least that month. Once you've got that number in hand, that's basically your starting line. Lenders, they usually bucket you into 3 tiers. Tier 1 is a VIP lounge. Tier 2 is the main floor. And Tier 3, well, that's the basement. You're aiming for that VIP status, which usually means a score of around 720 or 740 and up. That's where the best rates hang out. But hey, some lenders might give you that VIP pass with a score of 700. So the sweet spot is to aim for 740, but 700 and up is still pretty solid and you should still be able to get pretty good rates there. Now that you got the 411 on your credit score, it's time to roll up those sleeves and give that score a little bit of a glow up. That's pretty much my attempt at a Gen Z slang. The easiest way to boost your credit is by reducing your credit utilization, which simply means lowering your current debt. If you have the means to pay off your credit card bills immediately, then go ahead and do it. Since credit card statements typically work in 30-day cycles, having a zero balance on your statement can make your credit score shoot up in no time. While paying off your credit card debt, it is wise to hold off on applying for any loans or new credit cards. Those hard inquiries can temporarily drop your credit score, so every point counts, especially if you are planning to buy a car soon. Additionally, consider adding other trade lines that won't have a negative impact on your credit score. So look for credit accounts that don't require a hard inquiry. Alright, so here are the ones that I suggest. The first thing that you can do is add a trade line by Experian Boost. It's totally free and it works by including things like internet, cable, phone bills, utilities, rent, and a few others as a positive payment history on your Experian credit score. Now, there are some other trade lines that can even beef up your credit profile even more. But if you're on a 30-day time frame, that might not be enough time to give you a significant boost. However, if you have around 90 days, then it's worth consider adding trade lines like from Kovo, BoomPay, or StellarFi. Now, trade lines usually help the most when you have a thin credit profile, meaning that you don't have that many accounts shown on your credit report, but if you had other loans in the past like auto loans, student loans, or even mortgages, getting additional trade lines may not help. Now, let's talk about collections for a moment. If you have any collections with balances, then it might be worth paying them off. Having collections debt will still harm your credit score. Now, this route is more suitable for the short term if you can negotiate paying them off for a fraction of the original amount, say 10% or even 30%, and if the collection agency agrees to delete them after the payment. If you have more time, like 3 to 6 months before you plan to buy the car, you can try to dispute this information and have it removed. So with that being said, I do have a software that can help you with your credit repair for a fraction of the cost that you would pay an agency. It's called Credit Rehab Pro. It allows you to easily dispute as many accounts as you want across all 3 credit bureaus. In a matter of seconds, you can create dispute letters specifically towards your situation and print them out at home. What's more is that if an account wasn't deleted, the software suggests a new strategy for additional disputes. You see, Credit Rehab Pro is not just another tool, it's like a personal credit coach that guides you through the entire step in the right order. And the best part is, you have full control. You can repair your credit at your own pace in your own time. I do have a link down in the description if you want to check it out. So in the meantime, you are working on your credit and trying to get it to the highest score possible. Now you want to dig down on how much of a car that you can afford. We can definitely do a whole video about affordability, so let's just go over this briefly. You see, we all have wants and needs, but we also gotta be realistic about what we can afford so we don't become car poor. You probably have seen this trend all over TikTok and social media where people ask others of what their car payment is. And plenty of them have car payments over $1,000, which is pretty mind-blowing to me given the fact that average income in the US is hovering around $70,000. Now, there are plenty of rules or percentages that other experts talk about of how much car that people can afford, so let's briefly go over each one of them so you can have an idea of what you're getting yourself into. One of the most common ones is the 15% rule, which states that a maximum of 15% of your take-home pay should be allocated towards the loan payment. Just keep in mind that this does not factor into other car expenses such as gas, insurance, repairs, or maintenance costs. There are some other variations to this percentage as well, so some say you should stay closer to 10%. For instance, if your take-home pay per month is $4,500, then your car payment should be between $450 to $675 per month. One thing that this rule does not factor in is the length of the loan. Obviously, the longer the loan terms, the more car that you can buy, but just keep in mind that you'll be paying more interest over the term of the car. The next golden standard is the 20-4-10 rule. The 20 represents that you should put down 20% for the car. The 4 is the maximum term length that you should aim for. And lastly, the 10 represents 10% of your monthly gross income. So for example, if you make $70,000 a year, the maximum car payment should be $553.83. Now, when buying a car, we tend to focus on the price of the car and monthly payments of what we can afford. But one thing that's usually an afterthought is the cost of insurance. New cars will usually cost more to insure than used. So this is where you'd want to call up your insurance company and get some quotes. I've personally found AAA to have the best rates, so depending on who you insure with, your driving record, and where you live, will determine who will give you the best rates. So the idea is just keep in mind that whenever you buy a car, it is usually a depreciating asset. So 99% of the time, it will continue to go down in value. That's why putting a down payment is a smart move. So if you're looking to get out of a car whenever you sell, you're not upside down on your loan. Next, we need to figure out where we're gonna finance this thing. Are we gonna buy new or used, or we're gonna get a lease? Most people own their cars for about 8 years, so you have to figure out what category that you fall into. If you are a person who plans to own the car for 8 years plus, then buying brand new might be worth it. But usually buying brand new never makes sense since you take a huge depreciation hit the first few years. If you're trying to save some money and not take too large of a depreciation hit, then buying a used car anywhere between 3 to 5 years for the most recent model is gonna get you the most bang for your buck, due to the fact that the car still has a lot of life left. And the majority of the time, you're not gonna have any major maintenance issues that you're gonna have to deal with. But whenever you are buying a used vehicle, the interest rates on the loan is gonna be a bit higher. Then we get into our next category, which is leasing. I'm not against the idea of leasing since there are times where you can get away with a better deal leasing than buying a brand new car. But those days are kind of long gone where you can get sweet deals on luxury leases since the supply for new vehicles is still low. If you were to plan on getting a lease anyways, the general rule of thumb is the 1% rule, meaning that if a vehicle has an MSRP of $50,000, you would want to have your monthly payment to be $500 a month or less. Now, this is where you would have to plug and play your numbers. The more miles you have, the better, and having a lease for 3 years is going to be better than 2, since your payment may be lower. The downside with a lease is that you technically don't own the car, and even though you may have some equity when it comes time to turn in or sell, but you're essentially just renting the car for a certain amount of time. I do have a full playlist on leasing here that you can check out if you are interested in leasing. You also have to keep in mind whenever you are financing a new vehicle, especially if you're looking to buy a luxury vehicle that can go up to $100,000 or more, those payments can take a big chunk out of your paycheck. So it probably does not make sense to finance expensive cars since the depreciation will most likely make you underwater within the first year and you have such a big chunk of your monthly paycheck going into the car. If you are considering a lease, just make sure that you negotiate the sell price of the car like you were to buy a brand new car, because this will be a big determining factor of how expensive it would be. I personally like to buy from private sellers since I can usually get a better deal compared to dealers, but buying privately can be tricky. Now, when it comes to financing private sellers, it can be a little bit difficult because it does take 2 people to meet up in a bank, and if there's a lien on the vehicle, it can get a little messy, so typically buying from a dealership is gonna be the easiest route. But if you are a Navy Fed member, you can always get a loan check and write it out to the seller. Now, it's really up to the seller if they agree or not, since checks can be seen as fraud. So once you figure out whether or not you want to buy new or use, or whether you want to lease, this is where you want to think about securing financing. When it comes to financing, buying a new or used car, you can typically get a loan from the dealership or from your own bank or a credit union. But if you are considered leasing, then you would normally have to get a lease from the dealership. The leasing company will usually come from the brand. Like if you wanted a brand new BMW, it's going to be coming from BMW Financial Services. So you usually don't have that much flexibility when it comes to leasing. That's why loans will give you more options. So let's move on to getting that loan. Once you have built up your credit, let's just say it was 30 to 45 days ago, it is time where you want to look to get pre-approval offers. I would highly recommend getting pre-qualified from credit unions or banks that don't do a hard inquiry. This can give you an idea of how much you qualify for and what type of vehicles that you should be looking for. So some of them that are on the market that allows for pre-qualification without a hard inquiry includes Capital One, PenFed, Chase, and also Car Putty. I found that PenFed tends to get the best rates out of the four I just listed. This is also a credit union that caters towards military, but you don't have to be a military member to join. All you gotta do is open up a checkings or a savings account and deposit $5. It's only a soft pull when you apply. If you have a relationship with Chase or Capital One, then you may get approved easier, but I would highly suggest pre-qualifying for all three of those to see how much money that you can get and just get an idea of what interest rates are right now. A unique company that you may be eligible for if it applies for your state is called Car Putty. They can give you a flex line of credit. So imagine a credit card, but for car buying. They allow you to pre-qualify first to see how much money you can get, and if you get approved, then there will be a hard inquiry on your credit report. With this flex line, you can always use this credit for cars without always needing to reapply for a new auto loan. Now, you can get approved for anywhere between $25,000 to $250,000, and if you are a Turo business that qualifies, you can get up to $800,000. The rates that you will see through them are probably going to be a little bit higher than your credit union, but it does give you way more flexibility to get in and out of vehicles. Once you have an idea of what you pre-qualify for, this is also a part of the negotiating process. So let's just say that you pre-qualify for $40,000 and a dealer is trying to sell a car for $45,000. This is where you can show up with your pre-qualified check. And you can show them that this is all you can afford, so there may be some wiggle room for the dealer to come down a little bit more. Also, just keep in mind that when applying for loans, you have a 14-day window when they will count as just one inquiry. Yes, it will kind of look like they shotgun your credit report, but only one of those inquiries will factor into your score. So with the pre-approval in hand, now comes time to shop around and understand market prices. Depending on the car that you want to go for, you still might get a good deal if you're paying at MSRP. There are still plenty of cars out there that are going above retail since supply is pretty low, but regardless, it is good to understand what are the current values of the car that you're looking into and compare them. One thing that you have to understand is that each car will be worth differently depending on the trim and the spec of the vehicle. Sometimes people try to pit one car against another and try to justify the price, but you gotta make sure that it is exactly the same car. Does it have the same technology package, a performance package, a luxury package, or any other additional options that make the car cost more? When you factor all of these together, that's only when you can truly compare one car to another to make sure that you're truly getting a good deal from one or the other. The next thing to consider when you are looking to buy a car is to be open to dealer financing. I know before that I mentioned try to get a pre-approval from different banks or credit unions since they tend to give you the best rates, but if you're open to getting dealer financing, more times than not, the dealer may give you a better price on the car. Whenever you are negotiating on the car, you really want to focus on the final sales price of the vehicle rather than just the payments, because the payments is usually what gets you in the end. The thing is that with dealerships, they make a lot of money from financing. So whenever you get approved for a loan through them, they will get a kickback from the lender. This is something that you can use during the negotiating process if you already have a pre-approval. Because let's be honest here, dealers don't like it when you have pre-approval since they can't play around with the numbers and it makes it harder for them to squeeze more money from you. But if you are open for them to running your credit, then try to negotiate it into the price. Like saying, if I were to go through your financing, would I get a bigger discount on the final sales price? So once you get that loan and a better price on your car, you can always decide to refinance it later. If you decide to go this route, just make sure that the loan does not have any prepayment penalties. I would try to make at least 6 on-time payments before considering refinancing, since during that time, you'll have time to increase your credit to as high as possible, so whenever you refinance, you should get a better rate. Now, I want to turn it over to you. If you are in the market for a new car, let me know in the comments. And if you want to hang out with me some more and learn more about credit, check out these videos over here.